from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, another day, another crypto roller coaster. After a weekend slide, Bitcoin boosted late Monday by yet another tweet from Elon Musk saying he's in talks with miners about their energy usage, and what he's heard so far is promising. Meantime, billionaire investor Ray Dalio says Bitcoin's biggest risk is its success. Plus, hackers and their demands getting more brazen by the day. Bloomberg has learned at least one U.S. company paid $40 million to get its data back. We'll talk about the most dangerous cyber threats on the horizon with Nikesh Arora, CEO of Palo Alto Networks. And Virgin Galactic sends a test flight into space carrying 2 pilots. Space tourists are next. We will chart the latest in the private space race. All that in a moment, but first we've got to talk about Bitcoin, the cryptocurrency rebounding from its long slide over the weekend with prices on track for the biggest gain in more than 3 months, climbing as high as $38,000 at one point. Digital currencies have been gripped by volatility over the last 2 weeks, of course, with Bitcoin prices plunging as much as 18% Sunday. And some of the biggest names in finance are speaking out about it. Ray Dalio saying he would rather own Bitcoin than a bond. For more, we're joined now by Bloomberg's Joe Weisenthal and our very own Ed Ludlow. Ed, talk to us about the biggest moves of the day. And it's not just the day, but of course, Saturday and Sunday, it's been another big bout of volatility over the last few days.
Does anyone else have this sense of deja vu that I have? Are we talking about Bitcoin rising above 39,000 because of an Elon Musk tweet? Because I felt like we talked about that more than once over the last 5 days. What we got over the weekend was extreme volatility within Bitcoin, gains and losses, driven basically by Elon Musk first tweeting that he preferred cryptocurrency to fiat currencies. The latest in the last hour is basically about Elon Musk saying that he wants to comment and discuss with Bitcoin miners about publishing publicly the energy use behind Bitcoin mining. That seems to have given some support to Bitcoin on Monday, along with all of the other voices in the market that I'm sure Joe's going to touch on.
Joe, talk to us about this new volatility that we're seeing.
Yeah.
I mean, it's starting to blend together. What is standing out here to you?
I mean, it really is interesting. I mean, there's a lot of things going on right now, a lot of moving parts. You know, in addition to the several weeks of sort of weakness that we had seen in Bitcoin, we had also seen in tech in general, a lot of the stuff like ARK and QQQs, just all the sort of like red hot momentum tech stuff that blazing hot after the pandemic hit, having to slow down. Today, a really big rebound. It's interesting though, you know, this narrative, Bitcoin, it's decentralized, there's no leaders, and so people like this idea that Bitcoin, crypto, Elon's getting together with the miners and maybe going to alleviate some of the green ESG concerns. But it does seem like it's kind of this risk for the industry, the idea that there is this now North American mining council that meets together in private with the richest person in the world, talking about ESG standards. Maybe good in the short term, but you have to wonder how it fuels the sort of like, whether it undermines one of Bitcoin's key narratives.
Yeah, and risk or interplay with the financial system, right? You had Lael Brainerd of the Fed at the Consensus Conference saying that it did pose a risk to basically the global economy. And also really interesting to hear the interplay between asset classes. MicroStrategy CEO saying that the company might even issue debt to fund purchases of cryptocurrencies, to bring cryptocurrency onto the balance sheet through issuing debt. I mean, it's absolutely fascinating.
I want to bring in what Ray Dalio said earlier today because it's obviously having a big ripple effect. Let's take a listen to his point about Bitcoin's biggest risk. Listen in.
I think Bitcoin's greatest risk is its success. The more we create savings in it, the more you might say, I'd rather have Bitcoin than the bond. Personally, I'd rather have Bitcoin than a bond. And then the more that happens, then it goes into Bitcoin and it doesn't go into credit, and then they lose control of it. So yeah, that's a risk.
Joe, what do you make of that?
Well, you know, I think he's exactly right that the biggest risk to Bitcoin in some sense is its success. Look, I think you have to go back to the very beginning, even before the creation of Bitcoin by Satoshi Nakamoto and the anarchist community that wanted to create a form of money that couldn't be tracked, couldn't be controlled, couldn't be touched by governments, could move seamlessly across the internet. It's anarchist technology, and what we've seen in recent years is that this anarchist technology has tried to put on a suit and a tie and be accepted by Wall Street and put into packages, and in some countries they have ETFs, and it's sort of repositioned as a wealth management product that'll protect you against inflation. But at its core, it cannot be controlled, and at some point, setting aside Ray's point about whether it's going to take money away from bonds, I'm not sure. More and more money going into money that can't be controlled by the government. Essentially, you're going to start to see potentially more pushback. So I think he's exactly right.
All right, Joe, we're going to talk about this a little bit more. Bloomberg's Ed Ludlow. Ed, thanks so much for joining us. I want to bring in Spencer Bogart now of Blockchain Capital. And Spencer, you and I have talked many times over the years, and you maintain that this market is very different from 2018, that the volatility is different. But tell me how so?
Well, and look, in a lot of ways, it is similar. I mean, we've seen the story before where, Bitcoin, as it rises to its ascent, it's not going to be a smooth path. There's going to be volatility on the way. And particularly when we see the market get pretty hot and some significant appreciation, we get a lot of headlines that, present a little bit of headwinds for Bitcoin going forward. I'd say the biggest difference, though, today is that we have just a lot more use cases. I mean, if we rewind to 2017, 2018, there was a major question as to whether or not anything in crypto beyond Bitcoin would actually work, and whether people would even continue to value Bitcoin going forward. I think now that answer has been, that question has been definitively answered, and that people do value Bitcoin, and they're likely to continue doing so going forward. And beyond that, we've got a plethora of not just robust infrastructure for Bitcoin, but really a whole suite of assets that are emerging out of kind of Bitcoin as the original crypto asset, creating all sorts of new things in terms of DeFi in particular.
Spencer, is it good for Bitcoin that one of the third richest man in the world is meeting over the weekend with a coalition of North American miners to set standards and to sort of coordinate on activities?
It's neither good nor bad. I mean, I think that realistically, the idea that Elon Musk can control Bitcoin or create this centralizing force behind it just isn't going to work. I mean, if we rewind back to 2017, there was a big drama within the community about whether or not Bitcoin should accept a proposed change to how it works and how it functions. That included many of the largest companies and insiders in the industry, and even that attempt failed. So I think the idea that Elon Musk, as an outsider to the industry, is going to be able to somehow wrangle control is wrong. But it's neither good nor bad that he's coordinating these things. These are discussions that are worth having and worth exploring.
There may be an underappreciated trend at play here, and that is DeFi, Spencer. So explain to the normies and some people who might not quite understand what is happening here, what this means and why this could be such a tectonic shift in a market that's already shifting so dramatically.
Yeah, for sure. And I'm glad you asked, because 4 or 5 years ago, because from a venture perspective, at Blockchain Capital here, we operate venture funds. Everything we were doing was really oriented around Bitcoin and its growing ecosystem. Over the past few years, in contrast, everything has been oriented around DeFi. And so DeFi is the future of finance, and it's digital infrastructure for digital financial services and digital assets. And this is where we're seeing all of the adoption, all of the new traction, and all of really the new entrepreneurial activity is being harnessed within this DeFi ecosystem. And so a way of thinking about it is really, DeFi is what fintech always wanted to be. So fintech is digital front ends for the same antiquated infrastructure we've always used, whereas DeFi is rebuilding the whole stack from the ground up the way that we would if we could do so from scratch. And so that's unleashing a whole set of new financial services applications that are built on networks like Ethereum.
Right.
And these applications are in aggregate generating between $10 and $15 million a day in revenue. So there's very significant adoption and traction within DeFi very broadly.
But Spencer, I've been trying to study and wrap my head around DeFi a lot more lately, and what I see at places, at venues like Uniswap, super impressive, just extraordinary technology, super advanced, miner extractable value and flashbots, arbitraging different trades that are waiting in the mempool and so forth. But what is the point? All I see is a lot of trading of coins, and when I look at what those coins do, it's more coin things like balancing your coins and lending your coins. When does this bleed into the real economy where it starts to compete with TradFi in terms of functions that I get right now from a bank or an insurance company?
Yeah, fair enough. I mean, Joe, you're absolutely right. And you rattled off a lot of the most interesting things that are actually happening within DeFi and things like MEV and flashbots, et cetera. Look, longer term, these are always on 24/7 services. So they don't close at 5 p.m. They're not closed on the weekends or holidays. These are services where you can always access your capital. You can always get the financial services you need. And in contrast to our current financial system, they're not capable of discriminating based on race, gender, religion. This is a real leveling of the playing field for builders and for consumers. And that's a win for everyone because financial services are a core component of everyone's life. So having a more performant, more accessible, and more equitable financial system, I think is good for the world.
Okay, Spencer, thanks for breaking that down for us. We're going to continue this conversation, I'm sure. Spencer Bogart of Blockchain Capital, our very own Joe Weisenthal. Joe, of course, great to have you. Okay, coming up, Colonial Pipeline, SolarWinds, and Microsoft Exchange. Some of the biggest, most high-profile cyber attacks in history have happened just in the last few months. We're going to catch up with Palo Alto Networks CEO Nikesh Arora to talk about how companies can better protect themselves. Next, this is Bloomberg. Some of the biggest hacks in history happening over the last 6 months have investors watching cyber stocks. Our Katie Greifeld is looking at how that attention has played out lately in the market. Katie, what are you seeing?
Well, Emily, despite some high-profile hacks, I'm thinking the Colonial Pipeline, for example, cybersecurity stocks, they're actually lagging broader tech stocks year to date. As you can see here, the S&P 500 tech stock index, it's up about 6% year to date, while cybersecurity stocks are still in the red. However, they are making up ground as of late, and a lot of that is thanks to Palo Alto Networks. This company makes up 10% of that cybersecurity index, and this stock is on a tear lately after it raised revenue and EPS forecasts last week. Now, this company is projecting healthy sales growth, about 23% this fiscal year, 19% next fiscal year, and that's boosted the stock by almost 8% in the past week alone. But even with this bump, Palo Alto Networks is still trading well below its average price target. Now, that sits at about $440 after it was raised by 15% in February. And for context, shares of Palo Alto Networks closed today at about $364. So that's a lot of ground to make up, even with those strong forecasts. So this is going to be a stock to watch, Emily.
All right, Katie, thanks so much. Well, who else do we have with us now but the chair and CEO of Palo Alto Networks himself, Nikesh Arora. So Nikesh, obviously, as Katie just said there, shares of Palo Alto Networks on a tear. Your third quarter billings jumped something like 27%. Talk to us about what's driving that growth. Does this have to do with all of these hacks that are happening and increased demand for companies to protect themselves? Does this have to do with remote work? What's driving it?
Emily, nice to be back on your show. It's both of those things. As you've seen, the pandemic drove two major things. One is it drove this need for people to be able to work from home. And we saw the early signs where companies were buying capacity about 6 or 9 months ago. Now what's happening is people are re-architecting everything to try and get us to a place where they can be equitable for employees who are going to continue working from home and people who make it to the office. If you add to that the fact that everything was technology enabled, we all had to get our revenues to come from tech-enabled platforms because the physical world was kind of shut down. There's been an over-reliance on technology, and now we have these unfortunate incidents of a multitude of hacks around us, which are creating heightened awareness of security and hence driving some of the buying in the security space.
So speaking of heightened awareness, of course, Colonial Pipeline, SolarWinds, Microsoft Exchange. Is there something new and different and more dangerous about these hacks, or is this more of the same, hackers simply getting more brazen?
It's a bit of, Emily, with the constant adoption of technology everywhere, we're trying to make our systems open to our consumers who can access us from anywhere. Well, guess what? If you open access to your systems from anywhere, you have the potential of bad actors getting into your system as well. I think that's one vector of it. The other part is the hackers are getting more sophisticated. It's gone from being a hobby. There's real economic value. You can sit far away in a remote location, hack somebody, demand to be paid, and get paid in Bitcoin. There's no traceability. So, of course, they're getting more brazen in that context, but they're getting smarter. They're going after core infrastructure pieces because that allows them to go penetrate multiple companies and multiple governments around the world and then decide when and where to direct their attention from an economic value perspective.
Now, Colonial Pipeline paid the hackers in that case more than $4 million, Bloomberg has reported. When it comes to another company, CNA Financial, which is a huge insurance company in the United States, we're reporting they paid $40 million in ransom just to get their data back. Is that normal for a large company, a price that high?
Well, Emily, it depends on how you compute the price. Look, I'm not a huge fan of paying ransomware because what it does is it encourages more ransomware to happen. Having said that, when these people have gone into your systems, they basically crippled your entire business. You got to decide what it takes to go shut your business down for a day and how many days can you afford to have your business shut down? And then how long is the recovery cycle and what is it going to cost? I think when you add all of that up, I think $4 and $40 million is what people have justified as appropriate as instead of business. It's kind of like business interruption insurance, but they still have to go back and refresh all their systems, shut it all down, clean everything out, and probably go out and re-architect their security architecture.
Have you seen ransomware payments and demands increasing over the last year? Do you see them continuing to increase over the coming years significantly,
well, they have
or even
increased
exponentially?
They have increased. Last year, I think the highest demand we saw was $20 million. We're already seeing $50 million asks this year, and we're only in June. We're only in May. We're not even in June yet. So I think what's happening is the demands are going up, and also it's correlated to the sophistication of the actors. They're going out there and they're understanding what it takes to go cripple your infrastructure. They're sitting there, they're extracting data, they're asking you to pay for your data, they're actually trying to sell the data on the dark web. So this is a big problem. This is a non-trivial problem. It requires everyone in business to pay attention to their architecture to make sure that as they create more online capabilities for their business, for their systems, they're making sure that security goes in lockstep with that capability.
You've launched something that you call a zero trust network security to address a new hybrid workforce. Talk to us about what this is and what is different about this from other offerings on the market.
Well, Emily, we've been privileged to be able to have 5 bleeding edge or leading edge products in the industry, all the way from cloud security to world-class network security. And there is a principle, as you saw, the White House also articulated it, where you basically do not trust any piece of the infrastructure, and you make sure that everybody's asked to validate as they try and access your system. So very fundamentally, it's the principle of zero trust. Our entire network security stack has been built on zero trust. We just refreshed it, relaunched it this past week to make sure it complies with every aspect of zero trust. It is deployed by over 80,000 customers around the world. So we feel like we are giving them the capabilities to be able to protect themselves in these times. We are going to extend and have extended that capability to our cloud security business as well as our endpoint business. So it is a situation where we have to take all these cybersecurity risks seriously, and that requires a fundamental zero trust architecture across the board.
You don't have to look very far to see state actors like Russia getting more brazen. What is the threat level you see when it comes to state actors in particular, whether it's Russia or China, over this next year?
Well, it's an uneven playing field. If you can bring to bear the capabilities of a nation state against a company, against a particular piece of the government, or against a particular piece of our critical infrastructure, it's an asymmetric attack. So we have to not only prepare those individual entities, our companies, etc., we also have to have a national policy around making sure that security is paramount, and especially where we have mission critical assets. We have to make sure that they're tested multiple ways from Sunday, and we have to have clear policies around how to secure those assets going forward.
All right. fascinating, so much to watch, and thank you for breaking down this very complicated and quickly evolving landscape for us. Palo Alto Networks Chair and CEO Nikesh Arora. Nikesh, good to have you back. All right, plenty more coming up this hour and this week on Bloomberg Technology. On Tuesday, the video sharing company Vimeo goes public after its spinoff from IAC. We're going to hear from the CEO. And then Wednesday, Amazon holds its annual shareholders meeting where investors will want to know how the company is going to move forward without Jeff Bezos at the helm. Also Wednesday, another launch for SpaceX as its Falcon 9 rocket blasts off with the 29th batch of satellites for the company's Starlink broadband network. And Thursday, we will get quarterly results from Salesforce, VMware, HP Inc., among others. That's just a few of the reasons to stay with us on Bloomberg Technology this week. Make sure you keep it here. This is Bloomberg. Some other stories we're watching. Closing arguments have wrapped in the 3-week trial between Apple and Epic Games. Lawyers for the maker of the popular video game Fortnite made their final pitch, claiming the iPhone maker has an unfair monopoly by taking a 30% fee on in-app purchases. Following Apple CEO Tim Cook's testimony Friday, the company's lawyers maintained the fees are industry standard and said it has improved device quality and security for developers and users. The California judge says she hopes to deliver a ruling soon, but did not specify a date. Amazon is said to be getting closer to a deal to buy the film studio MGM Holdings. This according to the Wall Street Journal. Details of an agreement said to be worth $9 billion could be announced as soon as this week. Amazon has been under pressure to acquire more programming as rivals Disney+, HBO Max, Paramount+, and more continue to bolster their own catalogs. And Peloton has announced it'll open its first dedicated U.S. factory in 2023. The facility will be built in Troy Township in Ohio. It's expected to create about 2,000 local jobs. CEO John Foley says the factory will lead to expanded production and lower prices as the company continues to push into Europe and other new markets. And coming up, industry and world leaders have been scrambling to find a solution to the chip shortage. We're going to speak to Ampere Computing CEO Renee James about the production side of this issue. Her thoughts, as also a former president and longtime veteran of Intel. That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Semiconductor stocks are coming back after they fell 13% off the year's record high. Our Katie Greifeld has been digging into chips. In particular, Katie, what are you seeing?
Well, Emily, overall it was a green day. You saw the S&P 500 end about 1% higher. Tech higher still with the NASDAQ 100 ending about 1.7% higher. But your runaway winner was those chip stocks with the Philly Semiconductor Index up 2.3% for the day. Now remember, semis ran into a rough patch as some of those supply issues really started to crunch. You saw several weeks of declines for the stocks. But if you zoom out and look on a year-to-date basis, you've actually seen that semiconductor index overtake the S&P 500 in terms of 2021 performance. Those indexes are now neck and neck for the year, both up about 11.7%, give or take. And in addition to some of those bottlenecks starting to ease, the technical picture is also helping chips out here as well. If you look at the Philly SOX index, it actually broke back above its 50-day moving average. It spent several weeks kind of bouncing around below that, but now that break above definitively is helping to add to the bullish case here for semiconductor stocks, Emily.
All right, Katie, thanks so much. We're going to talk a lot more about chips right now. For more on what's at stake in the chip shortage, Renee James, Ampere Computing Chair and CEO, is with us. She was also the president of Intel, where she worked for more than 2 decades. Renee, you know more about this industry than just about anyone, so thank you so much for joining us. I want to start on Ampere, which is basically a chip startup that you have launched, and chip startups are rare for a reason. This is an incredibly expensive industry to compete in. It takes years to build up credibility with customers. Where are you and where is Ampere in that journey? Do you feel like you've crossed that threshold into the bigger leagues?
Well, I don't know if that we've completely crossed over. First of all, thank you for having us on. Ampere is a 3.5-year-old semiconductor startup, but in fact doing high performance microprocessors. So even at the very tippy top of the business, we're focused on building the highest performing, most power efficient microprocessors for the cloud data center. And yeah, it's a tough business. And a lot of people, go into it thinking that it's about the design, and a lot of it ends up being about not only the design, but the supply and the customers and the entire business of being in semis. So I think we had a couple of advantages given the leadership team had a lot of experience in the business, and we've had wonderful investors.
Well, as you alluded to there, you spent most of your career at Intel. You know the company, its resources better than almost anyone else. You were the top ranking woman at Intel, I believe the top ranking woman in Intel history. Yes. What makes you want to take them on or think that you can because you know so much?
Listen, I mean, I would just say, I'm not taking Intel on. Intel is a company I, for one, know a lot about, of course, and have a lot of affinity for. What we are doing is building what comes next. And the history of this industry has always been from mainframes to minis to PCs to PC servers, there's always a platform or something that comes next. So when I left Intel, I thought, there's going to be something next. And, if not us, then who? And so we went after it. And I was fortunate enough to raise the money to get the business off the ground. 3.5 years later, we have 2 products in market, top performing. Thank you, Ian King at Bloomberg, who wrote about them. And we also have developed our own core, which is, kind of the heart and soul of semiconductors, is to build the core engine and innovation of the platform. So I would say we're more forward leaning towards what comes next.
Huge shout out to Ian King, who keeps us very well informed on what's happening in your industry. And I have to ask about the shortage. What do you think is happening there? Is there anything that what we've been reporting so far is missing in the narrative in terms of why this is so bad, why there was such a mismatch between supply and demand, and when we're going to be out of this?
Yeah, I am glad that you asked that question. I think I have a slightly different view about it. Do we have a shortage? Yes, we do. I was lucky, again, to have been in the industry long enough to see, tightening starting. So I went to the investors and I said, hey, we got to start putting capacity in place to be able to grow the business at the rate we want to. That said, this is different. This is not, in my opinion, a cyclical shortage. This is a growth of the industry. It's the fundamental growth of semiconductors. And we know that because we see new segments emerging and new users coming to semis for the first time. Electric cars, the broad-based use of inference and artificial intelligence, and new segments of computing where we have double-digit growth that are not the PC, they're not the tablet, they're not the phone, they're new things. Certainly 5G and the edge, all of that is contributing to what I would say is fundamental growth in semiconductors that's here to stay. That's great news. Bad news is we didn't put the capacity in place to meet that growth. And I think we all were a little bit surprised during the pandemic how we continued in semis to grow through it. So one of the things I'm excited about is this administration's approach to creating an investment environment to help put more capacity in place, because this is long-term. We need more capacity in the industry. And I think that's an exciting news for all of us that are, especially me, where we're at in our growth cycle, that there's expansion happening.
Is there anything that you think that the CEOs of the big league companies should be doing differently? Whether it's Intel or NVIDIA or Qualcomm, in order to ease this shortage, or is the solution something else?
Well, I'm not sure that they can ease the shortage because they don't own all the supply. I'm certain that Intel and my longtime colleague, Pat, are doing things that they can do. But what I would say is that the supply chain is very focused on the big players. Because of the history of the industry, the top 10 players made up the predominance of the revenue of the industry in the US semiconductor business. So one thing we have to acknowledge is that the demographic of the business has changed. There are a lot of medium-sized companies and even smaller companies coming into the business. And why? Because fabless technology is so good. TSMC is not the only thing, but there's also the whole supply chain that goes beyond the wafer, that it enables companies like Ampere to exist. And so the supply chain, we need more help from all the players along the way to be able to diversify and support companies that are smaller scale. The entire business is focused on supporting the big guys, and the big guys can pay a lot for capacity. They can handle, surcharges in a shortage. And that is one of the things that I think through the work with the administration, things that we can do in the CHIPS Act, I think those are things that are super important to the long-term health of US semis, which as we now see is an underpinning to lots of other segments of our economy.
Now, I recently spoke with Lisa Su, the CEO of AMD, one of the other few female chip executives in the industry, and I'm curious why women at the top of your industry are so incredibly rare, and whether you're seeing signs that that is changing.
We all loved your book, by the way, Bro Culture. I saw your interview.
Thank you.
I saw your interview with Lisa, and I thought there's really just two of us. There's Lisa and I. So thank you for having me on. You've covered it. I think it's changing. It's changing because everybody's working on diversity, even the companies that haven't historically been as diverse. I think we're all doing a better job at it. Certainly, Lisa talked about mentorship. I agree with her. She and I both were mentored quite legendarily. I mean, I was chief of staff to Andy Grove for years. I worked with Andy up until his passing. I think, it has gotten a little easier, not a lot easier, and we still have a ton of work to do. And I look at the diversity numbers of Ampere. We're a small company. I mean, I guess some people would say we're medium-sized now, and we follow it and we work on it, and we have to have a diverse slate. You have to do it every single day because it still is a little bit difficult for women to break in.
It takes work every day. Thanks for reminding us of that and for doing that work yourself. Renee James, Ampere Chair and CEO. Renee, great to have you on the show. Thanks so much for joining us. All right, coming up, not all back to the office plans are created equal. After the break, we're going to hear which workers might struggle more than others when it comes to returning to the office. That is next. This is Bloomberg. Pandemic era work from home is winding down, but bosses might be happier about it than workers are. According to a survey by Truity, senior leaders are more likely to view returning to the office as positive compared to those with individual contributor titles. Joining us now for more on that survey, Molly Owens, CEO and co-founder of Truity. So Molly, walk us through the biggest disparities you're seeing between what the bosses want and what the workers want.
Thanks for having me, Emily. So we did see some big gulfs between senior leadership and the rank and file workers, but we also traced those back to some more individual differences. So we saw that in general, men were more enthusiastic about returning to the workplace than women were. And as we know, men are overrepresented in executive roles. So that's part of what we're seeing in that sort of management gulf. Another part of it was personality traits. So we saw a huge difference in how extroverts feel about coming back to work versus introverts. Extroverts say they can't wait to get back to the office. They can't wait for that interaction, where introverts have been feeling better, feeling more upbeat, feeling more productive at home, and they're really not looking forward to coming back to that office environment.
So when you look at some of the companies that are putting their stakes in the ground, Google, for example, saying they are going to allow hybrid work for some people indefinitely, Netflix saying it wants workers back at the office in September. Do you think that plans like that could backfire, that it could lead to a loss of talent? Or, will these companies find the people that want to go back to the office and are, the culture fit or addition that they need?
So I think these policies, these sort of 9 to 5 in the office policies, they do suit a particular type of worker. That type of worker that likes to be in a busy environment, that more extroverted person, especially the type of person that really feeds off of collaboration. And that's great, but you need all types of workers in a company. You're not going to go very far with just one personality type in your company. And if you want to have different departments functioning in different roles and doing well, you need to make sure that your work policies work for everyone. And I think especially as we've got millennials and Gen Z coming into the workforce, they expect a little bit more flexibility, a little bit more acknowledgement of their individual work style. They're much more self-aware, much more individualistic, and talented people from those generations are going to be looking for a work environment that they can tailor to themselves, where they can be the most productive.
Now, last quick question, because you also found a gulf between men and women, managers and non-managers. Tell us about that and how businesses can close that gap.
So we did find a big gulf between men and women, and I think it has to do just with the caregiving responsibilities that women have shouldered through the pandemic. And we don't know really how far out of the pandemic we are. We think our kids will be back at school in the fall, but we're not 100% sure. So we saw women cite just general uncertainty as a big concern for them in returning to work. So in thinking about that, we really want to make sure that we are tailoring policies that do work for working parents, that we're not expecting people to be automatons with no other commitments, that we do work in that flexibility where people can have that work-life balance if they need it.
All right. Well, I know a lot of parents out there who are praying for full-time school in the fall. There is a lot hinging on that. Molly Owen, CEO and co-founder of Truity, thank you so much for joining us. All right, coming up later this hour, ready for liftoff. Shares in Virgin Galactic heading skyward after the company completes its first test flight into space in 2 years. We're going to have details on that next. Plus, propulsion too for Beyond Meat shares rising as much as 9% after Bernstein upgraded the stock to outperform. The company also getting a boost from the UK supermarket chain Tesco. On Monday, it announced it's partnering with the plant-based brand to launch a line of frozen ready meals. That's next. This is Bloomberg.
Release. Fire.
You're watching images there of Virgin Galactic's Unity vessel, which successfully flew a test flight from New Mexico into space Saturday. The company stock jumping as much as 21% Monday following the launch, which carried 2 pilots on board. That is the biggest one-day gain for Virgin Galactic since February. The company's CEO, Michael Colglazier, spoke to Bloomberg about what the mission means for commercializing trips into orbit.
We had 3 big points we were trying to do in this test flight. The first was to test a new set of digital controllers that we have for the pilots, give them tighter steering. It worked flawlessly. It went really as it curved just straight up into space in a beautiful flight. Second thing we were doing was to ensure that we had the electromagnetic interference issue that had delayed us from earlier in the year. And all the work that we had done on that completely eliminated that problem for us. And then finally, we collected data that we sent over to the FAA, and we believe that will give us a great opportunity for them to analyze it and then hopefully clear our license for commercial flight. So all in all, just a beautiful day.
Michael, it's Guy in London. So what's the journey between now and that point, that license being achieved? What needs to happen? When's the next flight? What sort of milestones does that next flight have to achieve?
Sure. Well, this was our 3rd flight to space with humans, the first from the state of New Mexico, which is a beautiful, beautiful place to look back down upon the planet. And what follows next, we have 3 more flights in our test flight program. Our next one will come up with a full crew of mission specialists in the back, in addition to our 2 pilots. That one will be followed with a repeat, but we're asking our founder, Richard Branson, to come on and really test the private astronaut experience for us. We think who better to do that. And both of those we expect to happen this summer. And then that will be followed by our final test flight that's planned with the Italian Air Force, really showcasing how our space system's used for microgravity science research, as well as professional astronaut training. And we think that will likely happen late summer, early fall.
So let's get to that in terms of the pre-flight training. So Guy and I were going back and forth on this. How healthy do you have to be? What kind of training does there have to be for a regular person to eventually book a flight on this?
So what's really unique about Virgin Galactic is we take the first 50,000 feet or so with the airplane technology. So we take off horizontally on our mothership, climbs out to 40, 45, 50,000 feet. And then from there, the spaceship drops and then rockets up. So it's powerful, but reasonably smooth because we've gone through the heaviest part of the atmosphere, just like you would in a commercial airliner. It's really important to stay fit in general, but it's not something that needs unique, years and years of training. So we recommend people stay flexible because they want to be moving around in a weightless environment and kind of looking out all the windows. But generally, we think as long as people are taking care of themselves, lots and lots and lots of people will be able to go with us.
Okay, so not much training. Alex was concerned that I was getting a little bit old. Maybe,
I was worried.
Maybe it's something I should think about. Let's talk about price. In terms of this venture going forward, Michael, this is a question that I'm surprised I'm asking, but I guess we've got to think about it going forward. What is the path to profitability? When do you think this is profitable? Once it starts getting up and running and you kind of get through the initial kind of phase on this and this becomes more commonplace, are you going to be making money off this? When do you think you're going to be making money off this?
Well, the first thing we're needing to do, obviously, finish this test flight program and then move into commercial service. And we believe this is going to be a supply-constrained business for quite some time. The demand of this is going to be well out in front of our ability to build and scale the fleet up for a while. And as such, it will be reasonably expensive as it goes forward. Our previous 600 people generally had a price around $250,000 each. We have not announced what our pricing will be going forward. We've said it will be higher in the beginning. We do see pricing of around $600,000 for our per seat equivalent for our microgravity research flights. But again, we have not put pricing out for the private astronaut market.
Virgin Galactic CEO Michael Colglazier there, joining us to talk about this and other big tech stories of the week so far. Just started, Bloomberg's Ed Ludlow. So Ed, pretty important flight coming up this summer if Richard Branson is going to be on it. Talk to us about how Virgin Galactic now ranks among the other big private spaceflight companies, whether it's SpaceX or Blue Origin.
Yeah, there's kind of two sides to it. The first is in testing, right? This is the first time in 2 years that Virgin Galactic has been able to get into orbit. If you compare that to SpaceX and Blue Origin, who are initiating launches relatively regularly and are building up not just robust experience, but relationships with regulatory authorities as well. And you heard in that tape, Virgin Galactic has some way to go with regards to regulation. But the other side is the business model. Virgin Galactic is all about taking private citizens into space. The first being their founder, Richard Branson, who will be taken up by an astronaut. But also SpaceX plans to do that as well, right? They plan to offer orbital, lunar and Earth orbital trips, in the next 24 months or so, and are also offering trips up to the International Space Station. You can go on SpaceX.com right now and email their sales team and ask for an inquiry for a trip into space. So they're not alone in doing this. The difference with Virgin Galactic is they're very focused. They don't have these other commercial activities like Starlink with SpaceX or the NASA operations that Blue Origin and SpaceX are vying for.
Incredible. I think a few people are probably emailing SpaceX sales team right now. Meantime, you also broke a story this week that Tesla is testing LiDAR from a company called Luminar, which is interesting because Elon Musk has pushed back so hard on the use of LiDAR in Tesla's autonomous systems. Tell us what we need to know here. Quickly.
Yes, what we know is that Tesla and Luminar have an agreement where Tesla can use Luminar's LiDAR tech for testing and development. We don't believe it goes beyond that. What we think is that Tesla could be benchmarking their camera-centric self-driving system against LiDAR technology. As you said, Elon Musk has been very critical for the need of LiDAR, whereas the rest of the industry, your Waymos, your Cruise, and academics, they all go, nope, LiDAR is an essential part of the sensor suite for autonomy. So it's been interesting. There was a lot of confusion out there on Twitter, on Reddit forums, because these Tesla vehicles have been spotted in the wild, retrofitted with LiDAR systems, but it went against what Elon Musk had been talking about. So what we did with this story is set the record straight and showed that while Tesla may not believe in LiDAR, they're certainly experimenting with it.
Interesting. And Tesla shares fairly up today, up almost 4.5%. Ed Ludlow, check out that Bloomberg scoop from Ed and the autos team. Thanks so much, Ed, for sharing that with us. And that does it for this edition of Bloomberg Technology. Tuesday, we're going to hear from the CEO of Vimeo, Anjali Sood, after her company starts trading in its IPO. Tune in for that. Meantime, I'm Emily Chang in San Francisco. This is Bloomberg.